Can you please elaborate on the inner workings of the Hedgeye tweet about hedge fund degrossing and why it is a buying opportunity at VIX over 30? Would love to have some context. And I think before Keith goes into it, Josh Steiner on the, see if he sent me the stats. Josh Steiner on the call today, yeah, basically said that a big prime broker, I think it might have been Goldman, sent out an email to their clients and said the 50 heaviest shorted stocks and the 50 most widely held hedge fund longs outperformed each other by, so the shorts were up more than the longs by 800 basis points on Monday. The next day was 1,200 basis points.
Wow!
So you have this massive kind of short squeeze, among other things happening, where the longs over a 2-day period outperformed the shorts outperform the longs by 20% over 2 days.
That's awesome.
And then think about, of course, a lot of hedge funds use leverage, so that's where you're getting these kind of down 35% type blowups. Right?
Mm-hmm. You can see it, guys. Throw the factor exposure table up there. It's just data, right? The machine trades data. So if you call up Jim Simons and you want some picks, he's not going to tell you a story about a stock. He's just going to tell you a basket of stocks that have attributes that you want to be long. Clearly, you want to be long high short interest in quad 2. Now, if you don't know that, just look at high short interest, go across the page, and you can see it's up 30% in 3 months. Yeah. So again, everybody knew this, right, Jonesy?
Yeah.
What people didn't do was they didn't listen, right? So on Monday, by the way, let's go back to this, okay? Let's go back to my friend, all right? He's not my girlfriend, he's my friend. So this guy, why was he not, like yesterday, I heard some hedge funds were down, like down, like knocked out, like not getting up again, Leon, type stuff. This is actually very good. So what did he actually do? Because Monday, because I know, was not a good day for him. Not bad like Leon bad, but this, how did he do that? Well, because he took every high short interest name out of his book. Because he's not an idiot, right? You don't sit there and say, I'm smarter than the market, this can't be happening, it's crazy, right? Because by the time it gets crazier, they do, and back to the question, they degross. That means that they take down. So if you're one of these guys,
and they're running 200, 300% invested, right?
Oh my God, yeah. Degross, okay? See that? Degross is a function of drawdown, okay?
Josh Brown.
Oh yeah, who's that guy? You know, like, when you're having one of these, you do one of those, okay? That's the rule. The drawdown means you're losing shitloads of other people's money. Okay? If you lose shitloads of your own money, nobody forces you to sell. But if you're doing it with other people's money, because you're highly paid to do that, and not make stupid ass mistakes like not cover high short interest as a factor exposure, when you were told multiple times, Friday, Monday, you have a drawdown. So your capital, the money is going down, so the person that owns the firm is telling you to take down your book. Right? You take down the amount of things that you own. Now, when one dog barks in the hedge fund community, a lot of them start barking because they all own the same shit.
Or short the same stuff, which is worse.
It's worse.
And then you have the gamma squeeze, where the Reddit guys are forcing the broker-dealers, because of gamma, to buy more stock.
Oh, but that's so wrong.
Yeah.
We're worth billions of dollars because we're ripping these guys off for their whole life, and now we don't like this. I feel so bad for you. Have a cocktail. Do something else. Be the manager at Dick's Sporting Goods. I don't care. What I want to do is make money, okay? So that's what we want to do. So we were actually taking up our gross exposure. Again, on Friday, I went to 3 longs and 8 shorts. That's net short. So I'm not having a drawdown. I'm having a good time. Went and got bombed last night with Jonesy Buds, right? Because I'm not drawn down. I'm getting invested, right? So that's what you want to do, right? For 13 years, I've been trying to find a way to just get it right, you know? And I always thought Hedgeye would be better than Captain Hedge Fund Manager, the consensus ones. We like to think that we do business with the top 20% that are going to absolutely be in these kinds of buckets, right? If you did that in the last couple days, well done.
Yep.
You're going to raise money. You're going to get the money that came out of the drawdown. This degrossing, that money goes somewhere, right? And that's called America. Don't whine and cry about it. Gamma squeeze? You know what that is. You should know better, right? So again, don't whine and cry about it. Learn, and if you learn faster than the consensus, the 80% of hedge funds that can't make money in markets like that, you're going to take their capital. That's capitalism. That's how it flows. And we want to do business with all those people that understand that evolution. So again, a bit of a rant, but a good one.
Yep.